Good morning, everybody. How are you doing? It is Tuesday, November 28th, 2017. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, however, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. My name is Wayne McDonell. Namaste. Thank you for being here. I appreciate your respect and the loyalty you show me every single day. Do these sessions Monday through Friday here at Forex.Today, starting at 7:30 in the morning New York time. It's approximately London lunch. It's a great time for us to get together as a community here at Forex.Today to align our satellites, cover technical and fundamental analysis. So thank you for being a client to TradersWay, and if you have not tried us out, please do. Visit TradersWay.com, open up a demo account, test out our execution speed, test out our customer service, try out our spreads. I think you'll find it very, very competitive. But the thing is, what differentiates us from everybody else is I love you. And I want you to succeed. Oh. Okay. All right. G'day, mate. G'day, mate. So let's do some technical analysis. Let's just, I don't know, left to right, clear our charts here. Okay, here's our old resistance line going back a few weeks. It would even let me grab it. Come on. Yeah, there we go. Now we're having some trouble on the breakout. The only question is, are you a buyer here or not? That's all it is. Are you trading this move here as a breakout or not? If you're a bull, what are you going to do? What are you going to do, huh? Well, as a bull, the weekly buy zone is this. Come on now. Changed it to blue. There we go. Is this area here. This is the weekly buy zone. You'll see a little bit lower than that is the monthly central pivot point. And the weekly support 1, which combined is also definitely support. So if you look, what we're talking about to the left is to kind of this area here. Oops, trying to get that straight. So really, if you put those things together, this whole area really is a buy zone, isn't it? Okay. John has an opinion. He says it will explode up. See, I don't even think that way. Oh, that's interesting. Cool. Good luck with that. I just say, look, if I'm a bull, I buy at support. So where's the support? There's support here, which means I could buy it if I wanted to. And there's support down here. I could buy it down there as well. Will it explode up? I don't know. Right? Excuse me. You'll say, oh, well, it's the inflation report. Oh, well, it's Brexit. Oh, well, oh, sure. By all means. Yeah, cool. But I reserve sort of, I don't have opinions. I have bias. Opinions are like guesses, I suppose, right? You're like, well, how would you know that? How would you know it was going to explode? But when you're using technical analysis, you could say, well, you know, we're making a series of higher highs, so I'm buying higher lows. Or you could say, this is a breakout, so I'm buying the retracement. It's not really an opinion, right? It's not really a guess, right? So it's just, that's all. It's semantics, really. But I just don't like the language, I guess is what I'm saying. It feels like, let's say, someone came to me and they wanted me into invest, and they're like, "Oh man, the pound's it's going to explode. It's going to boom. It's going to," you know, don't believe the hype. Don't believe the hype, right? So I'm just like, no, whatever. So it'd be great if you put money on it. I hope you're right. But I'll be here all week, folks. Right? You don't have to. You don't need the. You don't need it to explode. I guess, right? So I'd rather you look at it this way and say, well, I'm a bear. I'm going to sell it up high. It's a 618, so I'm looking for weekly resistance. That kind of stuff. Like if you're a bear in reverse here, like wouldn't that cluster be just a fantastic place to sell? A monthly R1, weekly M4, weekly R2 above it. See, so I'm not thinking like, oh, it's going to explode. Oh, it's going to have this great move. Oh man. I'm more like, nah, that's resistance. So if I'm a bear, I'm going to sell that. Or if I'm a bull, that's where I'm going to take profit. So let's say I'm a bull. I'll do this in black now, I guess. So if I'm a bull and I end up buying it down here, I'd like to take profit right there. It's just sort of factual. So I guess what I'm also saying, John, is I don't know if it's going to explode up. It could, but I don't know it. I don't know. And if I bought it, I would assume it's going up. That's why I bought it. But how fast? Well, I can't control that, right? I can't control how fast because we need other people to buy it, to move it, right? You see what I mean? So it's like, well, all I can control is at what price I buy it and what price I should likely take some profit, right? And that's that. And the rest is conversation. So I'm not disagreeing with you. I'm not agreeing with you. Cool. Okay. So let's say you thought it was going to go up. Let's clear this. Wouldn't you think it would do this first? I don't know. I mean, that's what the chart's saying, right? Or even, how about even a fast move down and then you buy it even up in here? So I was convinced this was going up to here until we broke the 21. Okay? So now I'm bullish, but expecting retracement. And then so maybe that puts us down here, even further down. And we end up buying it down there. Kind of sucks being monthly M2 on the last day of the month. Kind of sucks. You're not supposed to be at M2 on the last day. You're supposed to be at M2 on the first day. But whatever. But do you see what I'm talking about as far as the moving averages? They tell me this. I mean, I look at it and like, well, it's going to do that. Any questions about that thought? Because again, I don't know. I just look at it and that's what I see. No questions? Yes, you guys are pretty good. Getting good. Mickey says, what about, I just drew that. Oh, good. I'd like to understand something. I know I have to take profit always week layer two, week layer two, but you're trading one. Okay, now, so are you taught by Kenny says, I'm always supposed to take profit at weekly R2 or weekly S2, right? And you're like, well, what if I'm trading monthly pivots? Well, then wouldn't it be monthly R2, monthly S2? It comes down to your trade plan. Is it a daily trade plan? Is it a weekly? Is it a monthly? And then when you see combinations of weekly and monthly, that increases the probability of risk. Okay. Okay. So then if it's risk to you, you need to manage it, whatever that means to you, right? So anyways, going back to the previous question, I guess people missed it. Because it's bouncing off the 55, it's going to make a lower high. Okay. That's why I think that. That's what these moving averages tell me. Now, why would I say down here? Why would I say that far down? Guess I should do it more like this. Because I'm combining two things. Thank you. I'm combining two pieces of analysis. The swing traders have a plan like this. Okay? Okay, that's just bearish swing trading. They got their price. It's sold off. That's what they're thinking. Now, I don't know if it's going to do that, but I know that's what they're thinking. So they're actually treating it probably like a range, like it didn't break out, which means you're vulnerable all the way down to here, really. But moving on to the next part, down to the 55. 55 predicts either a double top or a lower high, so that means a false rally. Let's just say up to the pivot cluster, head and shoulders if you want to call it that. I wouldn't, because this isn't trending, but back into the range nonetheless, down to the next level support, back up into the roll reversal, down to the weekly target, right? And maybe we call this area here support, as I drew earlier. Something like that. Okay? Once again, do we know that's going to happen? No. But that's what all these little colory, lines are telling me. So basically, this is still range bound. Okay? The market's not treating this like a breakout. We should have stayed above that 21. Now maybe, maybe it's a daily setup. Okay? But that means we get down to the lower pivot here. Okay, so that still gets us halfway down to that first level of support. So what I was saying before is if you're a bull, you simply identify the next two levels of support which you would consider buying. This could be one, the daily 21, right? It's also the weekly support. It's also the monthly central. On the last day of the week, or last day of the month, it's kind of like irrelevant, really. But maybe you're going to play this whole thing as a roll reversal. Oops. As you can see, I got red lines in there going back 2 months ago, right? So you're going to treat it like a breakout this way. Okay. Bear in mind, even though the weekly isn't going to change till the weekend, Friday morning, this pivot here will move. So really what I would expect on the short term because of that, I would kind of ignore the monthlies, and I would say this is an S1, R1 potential week as a bull. And then we'll regroup Friday, right? So it says supported by bonds. Well, the last time I looked, the 10-year T-note's at like 2.33, and it's been there months, 2 or 3 months, three or 4 months. So I'm not really considering like a bond move until we break 2.4, 2.5, really. Oh yeah, bonds intraday. Okay, fine. Okay. Sure, that's fine. What specifically do you look at when you say bonds? 5, 10, and you don't do 2, huh? Yeah. You don't look at spreads either, like 210 spread occasionally? Cool. Did you ever trade bonds before Forex? Okay. Fine. Cool. Nothing wrong with that. I would almost look at it differently though. Like when bonds were very, very predictive of the dollar move, it was when we were in a risk-off world like 2007, that kind of stuff. I would almost reverse the logic and look at the stock market to predict, dollar weakness or something. I'd almost look for evidence of risk on, not risk off. I mean, you might get exactly the same thing. I'm just wondering, and I'm thinking out loud here, and I don't mean to I'm not challenging your theory, but I'm just thinking out loud that I wonder if you're applying old logic to a current situation. Oh yeah, sure. We still haven't paid the price for that, in my opinion. So anyways, because we're not really in that world, right? We're not really in the bonds, bond prices up, yield down, buy dollar denominated stuff. I mean, we could get there if there's another global hiccup like I was talking about yesterday, but I'm almost looking for risk on scenarios outside the United States. So if money starts flowing outside the United States, foreign direct investment, business spending, and that kind of stuff, wondering where it's going to go. I'm not worried about Malaysian billionaires buying 10-year T-notes or that kind of stuff, right? I'm more interested in when are the Malaysian billionaires taking their money back and start investing into China and India and anything but Malaysia. Like, what's wrong with Malaysia? Well, a Malaysian billionaire already has investments in Malaysia, and he owns the government too. So I should be careful. I might be in Malaysia tomorrow. So I love Malaysia. The Malay are such beautiful people. All right, got that in there. Kuala Lumpur, that would be cool. Euro dollar shouldn't be much different. So you ask yourself, are we at the end of the trend and all that kind of stuff? Well, we're near the last day of the month, right? Definitely the last week of the month. The last day is in like, what, 2 days? This is the conservative predicted target for the month of November, right? On the first day of the month, we were basically here, okay? And if you were a bull, the projected target was here. It's neat, right? And on this particular week here, in the swing trading course, what does the counter trend predict in that scenario? What does the what does the swing trading course teach you? Yeah, back to the central, right? You're like, wait, it's not perfect. It went to the, okay, fine. It's imperfect, but fine. Well, it wouldn't be monthly because those are weeklies. But anyways. Cool though, right? So here's what happened if you're a monthly swing trader in the month of November. It hit support and went up, it retraced and went up, and it was done. That was the month. How was November? Went up, I bought some on a retracement, and it went up again. Oh, how exciting. Don't you love it? I know, right? Cool. What are you going to do on the D's? What are you going to do on Friday, man, when we get new pivots? For show. Yeah, well, at least you know when you're wrong, right? And that's the part of the strategy. One of the best parts about having a strategy is you know when you're wrong. You should get, you should retreat and run for safety, regroup, right? California show. Time to look at peso. No. I mean, it's not going to move till Friday, right? You understand? The first day of the month is a Friday. So the peso is going to move, right? But is it going to move on Tuesday? Kenny says, in the case where I am late in the taking profit, is it where? You know, it's just risk, guys. You just literally need to make a decision. So I can say, there we go. So if you're long here, and you were, you know, you have the decision here to take profit at weekly M4. All of this is decision making time, right? So the first decision here is, do you take profit at the monthly M4? Well, that's the place you're supposed to think about it. And then it double tops at the weekly M3. Isn't that where bears sell? And then it makes a lower low, lower high off of the monthly M4 again. Isn't that a reversal pattern? And aren't reversal patterns supposed to happen here? And isn't that what This was predicting all along. So what should you do now? I don't know, man. Well, so then Kenny says, well, but the fundamentals say blah, 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 blah. Well, are you using monthly pivots or not? But if your plan is to take it to monthly R2, fine. Okay. Okay. All of this is risk. So you're probably thinking now that we're at the 21, this thing better turn north. No, there's no problem, but you need to measure your risk and address your risk. Didn't have an exit plan. Well, yeah, that would be, well, you don't need an exit plan, but you should know where your risk is, right? Yeah, that's all it is. You have to understand you're a risk manager, right? So where does the risk reside? Well, monthly pivots have a pivot profit zone. Oops, let's do it again. The monthly pivots tell you this. So if you're using monthly pivots, there's this. I mean, it's just factual. But this is subjective. I mean, like, this is where you think about a target. This one you have to get out. Cool. Right on. So you're kind of right in there, near the end of the month. But you're thinking, it's going to come back down and then go back up. Okay, that's your judgment call. But then on the weekly side, you know there's bears here. And if you get a bearish engulfing candle, your bullishness is going to be challenged. And you're like, oh, snap. Yeah, but it's only fallen for 24 hours straight. You know, so at some point you just need to say, you know, as a risk manager, when you decide to fold it. Now, it's not an easy decision. And, you know, and this is the hardest part of trading, I think. Because once you get past sucking, then you're going to have to deal with profits more than you're going to have to deal with losses. And what I said to Ryan earlier, losses are great because you have a trade plan. As soon as your trade plan falls apart, you're like, oh my God, look at that. Right? And now you're out, but it's not a question. You're not biting your fingernails. It's obvious. Now in this situation, are you going to stay long and go up here? Yeah, great question. There's no answer. You know, I'll tell you next week. Right? I'll tell you next week what the right answer is. Yeah, it's so much easier. So you better be, you know, strong on your fundamentals, like you said. Freddie Boy says, well, let's see how this current 4-hour candle is going to close. Well, that closed poorly. I mean, none of this is really that, but you can see it's becoming oversold. I would start cutting corners like this. I'd start dropping into smaller time frames. Is it bullish here yet? Nope. Is it bullish here yet? Nope. So one argument is you could have taken profit on Monday, right? And what? Waiting to get back in, right? Because this isn't a buy zone here for you. So where's the buy zone? Well, the weekly buy zone is here. So I don't know. I think yesterday would have been a bigger deal than today. There is no buy zones until you're really down here. Cool. Whatever. Whatever. You got it. You're good. Before I do CAD, let's do oil. Sorry, that's gold. Oil. Cool. So, what's the word on the street about oil? What do you got? John, there was a holiday in the United States of America. So we didn't do videos. Yesterday's isn't up there. I had a power outage. Yeah. Yeah. So anyway, what's the word on the street here with oil? Well, there's a Vienna meeting coming up, right? Are you looking forward to that? The members of OPEC have already announced they're extending their cuts. Oh. But not Russia. Oh. But everybody else has already agreed to the cuts. And they haven't even started the meeting yet. Sweet. Nice. So Ryan says, so up and then down based on the 55 and all that kind of stuff. Or we already played that. Buy the rumor, sell the news. So I've been telling you to buy this thing since 35, right? And then again at 45. And it's still going up. We're well beyond 55 now. But the story really hasn't changed. Were we worried that they were not going to extend cuts? But the interesting thing is, this is the top of the month. Okay? And I think I was joking sort of back in here. Remember kind of talking about just being done for the month and taking the rest of the month off? I mean, it's really, really difficult to trade above this area here. It's the predicted high. You know what I mean? Like we knew that on the 8th. But we're already at the top. Right? Do you remember talking about like just now it's time to take profit kind of stuff? Time to take profit. It moves sideways for a week. Remember all that? Like this is the top. Another way of looking at it is we were riding it up. Then it had this ginormous spike on Monday. And I'm like, stop! Nobody remembers that? I'm like, that's it. I know you're super excited. And we've been talking it up for weeks. But stop! Right? Whoa! Okay. And it moved sideways for the rest of the entire week and then had a very significant drop into the roll reversal. Now it's tried it again. We're back. And check this out. We're at the same price as we were November 8th. What if you did take the month off? Or sorry, the month. What if you were gone the last 2 weeks? You're like, oh, look, nothing happened. You check your phone. Oh, oil's at 57.68. Well, that's where I left it. But there's also another trade in here, though, right? easy then. But anyways, all of this sort of presupposes things like not extending the cut is the same as increasing supply. You kind of get that? Right? And if they didn't extend the cut, oil would fall because it predicts an increase in supply shifts the curve because it's not a price demand issue, it's a supply issue, right? Let's do it quickly. Demand curve, supply curve. Okay, an increase in supply. I almost forgot to label it. Okay, this is the quantity of oil. This is the price. If you forget to label your chart, man, you are going to get ripped by your professor and your TF. Anyways, so the old equilibrium price and quantity, we'll call this P star. I don't know why I put a 1 there. Anyways, and we'll call this Q star, quantity, the old equilibrium. And now an increase in quantity, right? You get it? We'll call this Q2. An increase of quantity, more quantity, this is Q, lowers your price. An increase in quantity, right? Not quantity demanded, quantity supplied. That's why it's a supply curve. And that shifts the quantity up and it shifts price down. Okay? So if the Russians come in and don't sign the deal, you can assume the whole thing's going to fall apart and the supply will shift to the right, price will drop, and you'll sell. Cool, right? Does drawing the supply-demand curves, does that help visualize why the price rises and falls, or is it silly? Does it help? Anybody else? Yeah. Yeah, because I'm not sure how much economics you've had, so cool. Yeah, right on. Do the international suppliers want to preserve North Dakota? Oh, pressure North Dakota more than $40 oil. Well, on the sort of political economy side of things, Robert, is like, how long can Saudi Arabia sell their oil that cheap and still pay for their social subsidies? So they're profitable selling at 40 and 50 and $57 a barrel. They're profitable because they're pulling the oil out of the ground for like $3 a barrel. But they're spending it at $100 a barrel. Is unfortunate, right? Well, I don't know if they give up on the U.S., but at the end of the day, you need money, right? What would you do if you had a population that was 70% below the age of 35? And nobody's got a job, no one wants a job, no one even knows what a job is. You're like, wow. You're going to need some cashola, right? Mucho dinero, señor. Ay, 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 ay. Right? A plethora of money. Sí, señor, a plethora of money. Yeah. Do you know what a plethora is? No. No, señor. Then how do you know I have a plethora of money? I think I'm quoting the Three Amigos. Sorry if I just lost you there. That one's a little obscure. By the way, speaking of absurdity, there's a house for sale not far from me that has a 15,000 square foot garage. Oh! I think I want to check that out. You know, it's designed for 30 cars and some other things, right? But yeah, but it is a museum, right? But here's the thing, because what you're probably thinking is some aluminum sort of like airplane type hangars that some guys built. No, 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 no. It's underground. It's underground. Drilled directly into the bedrock. Yeah. Yeah. Yeah, sounds cheap. Well, it is technically a bunker. All the windows in the house are AK-47 bulletproof, which is really necessary here in Atlanta. Because, yeah, in the neighborhood, we get a lot of drive-bys. You know what I mean? By the way, the house is probably farther from the street than an AK-47 could actually reach. But, yeah, I think it's like in a zombie apocalypse type thing, really. But I just thought it was funny. Like the Three Amigos. That's pretty funny, too. Yeah, we'll get to Aussie Dog. I just want to point out a couple of things and we'll move on. We had a trade plan here of don't buy it until you have a bottom. Do you remember that conversation? So then we talked about, well, what would the bottom be? How would it shape up? So I said up into the roll reversal, down into the false rally. Well, rally down, right? Right, so lack of extension would then create a double bottom, which then you'd look for the higher high, higher low. And we got almost all of this. I think I predicted these moves before any of this happened, right? Before the candles. I think we were still like just touching this. So I said it would 1, 2, 3 up, rally down, double bottom, 1, 2, 3, then up, then roll reversal, right? Like none of these candles existed, right? It's pretty accurate until about here. And it just didn't rally up, but it did everything else pretty nicely. But this is all, see, if you look down in here, this is like a double bottom. Then you can see the 1, 2, 3 roll reversal. Up until where? Resistance. Well, what's it going to do at resistance? It's going to fall. But if you're a bull, is it going to make a lower low? No. So what's it going to do? Roll reversal there. Where? Up into the resistance. Great. So if it's at resistance, what is it going to do? It's going to come down. Is that a bearish sell zone? Or bears going to be there? Yeah, of course they're going to be there. So it's going to fall. Great. But you're a bull, so is it going to make a lower low? No, it's not going to make a lower low. You're looking to buy it. So what are you going to do? Look for a double bottom. Great. So when you get there, what's it going to do? It's going to 1, 2, 3 off the roll reversal, right? And where's it going to go? Break through resistance. And then what is it going to do? It's going to hit resistance. It's going to fall. Is it going to make a lower low? No, I'm a bull. So what's it going to do? It's going to come back to the role reversal in which you'd buy it and go up to the next level. So all of it is very, very logical. It's like, where are the bulls going to buy? Where are the bears going to sell? We just don't know if they're going to do it. And so we were pretty accurate until about here, and we just didn't get the bulls. But we didn't get the bears either, right? So trading just basically ground to a halt. That's why it's all relatively predictable. I thought we did a pretty good job on that. Okay. Gold, got to get some gold in here. Sitting and waiting. Okay. Talk about just sticking with the trade plan, right? Buying dips. Buying dips is supposing dollar weakness. That would suppose pound dollar up, euro dollar up, and they are way up. Right? So look at the last 2.5, well, I guess 3 weeks, the last 3 weeks, pound dollar has been up. For the last 3 weeks or so, the euro dollar's been up. And I believe we predicted that all based on gold going up. Right? Is that right? Is that how you remember it? We found a bottom for gold. We expected gold to go up week after week after week, which would then create US dollar weakness. Right? So 3 people have said yes to that. Anyone else? Anyone else confirm that we looked at gold to predict US dollar weakness? Because it's important, like, how do you pick the winners, right? How do you predict the future? With an assumption, and the assumption, if valid, will have consequences, right? So if that is true, then what do you trade? Okay. Now we have this move down into here. This is the break point where we stop. Now remember, the actual target was here. You notice how it's 618, and we had this, didn't we? Didn't we have that lined up? The 618 to the downside. But oil's topped out. So if oil's topped out, is it supposed to go up? Well, or in this case, down, I should say, because I'm looking at this from the point of view of CAD. So if when we're here, let me draw this. If we're here now, so this was an oil rally. This is where I said, stop with the oil. We hit the monthly target, yo, right? Because the vulnerability is if you hit your monthly target early in the month, you retrace all the way back to the central, right? So that's why you're like, whoa, 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 whoa. So anyways, so we had this channel to really emphasize a change in trend, which, you know, breaking through the channels here. So all of a sudden we're back in here and there's a 618. We talked about, like, that's where a bear would try again. Now, it doesn't mean they're right, but there's fair amount of certainty that either here or here, the bears on this pair would try again. But there's no reason for oil really to go above the pivot profit zone for the month. So anyways, it's kind of interesting. Now we get down to here. Oops. Okay, and that's very bullish, which is very bearish for the CAD, which is actually very bearish for oil, isn't it? Right? There we go. So it's all very interesting. So I don't know if you want to trade it up there. I think we need some new monthly pivots and all that kind of stuff. What? All right, so Aussie dollar. We got a call for Aussie buck. Let me move that up there. Aussie dollar. Aussie dollar. Aussie dollar. Quick on the draw. I thought it'd be dead. He put the Aussie to my head. This is what he said. Okay. This tells me up to the 200, then down, or just simply down. Your call. Okay. This is a role reversal. That's just that. This is a role reversal. That is just that. So, plan A, plan A is this. Okay. Plan B is this. What might end up happening is down to here, false drop. If you're a bull, right? And you're going to watch this go from this trajectory to actually this trajectory. So then that gets you kind of a move here. And then who knows, because now you're at the 200. But right now, there's nothing necessarily to say bullish. Okay. Mm-hmm. You might want to use this as an example as well. Drop off the 200. Yeah, Robert says, well, they're both weak, so couldn't you find something better to trade? Yeah, I totally agree, but somebody asked me to do this. I'm like, okay. Any other currency pairs? Beast. Oh. Looks like I already did it. Any questions? So I look at that like, well, if you're a bull, you need to start creating bullish trade plans now, right? So what's your bullish trade plan going to be? Well, wouldn't it be great if price was above these lines, not below the lines? Okay. Do you see anything bullish yet? Not yet. So you wait. Cool. You can see if you're a bull, if this starts going north, which it ain't doing now, but if at some point you get a move like this, up, down, you should probably be long and strong. Okay. You probably move this a bit. Yeah. Anything else? Yeah, Kenny says, so the logic is when both currency pairs are weak or strong, you should trade following the strength or weakness. Yes. So what I've done for you guys many times is for you to do a relative strength exercise. So you can pick out the strongest, the weakest, and the neutral, and then you trade the strongest versus the weakest. You find the strongest currency and trade it against the weakest currency. But if both are weak, I don't know how you can predict which one will suddenly be weaker or stronger, right? So you might want to look at like pound Aussie, euro Aussie, for example. Right. And I think didn't I get you guys on a euro Aussie trade based on a relative strength exercise a few weeks ago? It was one of those pairs, wasn't it? Yeah, I guess it was this one. Yeah. See? How easy that is, huh? So I keep drawing these peaks and valleys because they're entries, right? Up, 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 down, down, buy, right? Up, 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 down, down, buy. Up, 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 down, down, buy. The rest is just picking out where your buy zones are, right? It's usually pretty easy. Looks like that's going to be a challenge, isn't it? Wow. Boom. But that's why you look for trends. Eventually, it's easy, right? Up, 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 down, down, buy. Right? Here's the breakout. Up, 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 up. So let me zoom in a little bit. Let's go into the 1 hour. Right? Up, 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 down, down, buy. That's just straight up out of the basic trading course, isn't it? Breakout. Right? This is the buy zone. You could even have it fibbed if you want, I'm sure. Yeah, it's not a great fib. I don't really fib, though, on these. What I tend to do is I look for the old support and resistance, but whatever, a retracement's a retracement. If you have a plan, it's easy. If you don't have a plan, then it looks difficult. And you're just going to have to trust me on that. A breakout, you look for a retracement and you buy. I'm not making this up on the fly. That's why I drew all these gray lines for you. We did the relative strength. We found Aussie was weak. We found the euro was strong. Identified support and resistance. You have the direction of the trend and support and resistance. The rest shouldn't be very difficult, right? If someone gave you a trend, here's a trend. And by the way, here's all the levels of support and resistance. What's left for you to do? Hoping it comes back to support and you buy. Correct. And then go to the beach. By the way, I was just at the beach. Okay. So, but your job is to do the relative strength, right? Your job is to have a fundamental bias. Your job is to identify support and resistance. And then your job is simply to buy at support or sell at resistance. The rest is just the fact that you were trained to make things complicated. And that's the fault of the school system. All right, we did beast. So somebody, oh, Kiwi yen, that's right. Someone was asking Kiwi yen. All right. Oh, did I just kill that? No, there we go. Lead it if you will blunder. Okay. So, like, I'm not sure what the question is, but that is the conservative projected low for the month. And it's a double bottom. So I guess, I don't know what the question is, of course, but if you're thinking of buying it off the double bottom, great. What are you going to do to show the judge and jury that you're buying it off support? So that's all it is. So a bear would be selling it. Oops. Well, let's just draw. Here's what a bull would do. Right? And what would a bear do? And if it breaks above, oops, if it breaks above bullishly, okay, you get a situation like that. So it really comes down to what you are, and where you buy and sell is pretty straightforward. The more difficult part is realizing that this is not going to go straight up, that you have to play the double bottom, and there are bears ready, willing, and able to sell the rally. So I'm going to do it off the pivots here, the old pivots, and I'm going to say a bear will sell here. And you can see I've already drawn all this, but I'll draw it again. Okay. A bear will sell here, and yeah, I'm going to have to mark that one. Okay. And once you're higher here, like this 382 50% zone, that's pretty high probability stuff. So with that being said, even if the bulls are right for the next few weeks, let's say someone buys it off this bottom, okay, it's going to go up to here. Someone will drop it, but let's say the bulls are still right. Then it gets up into here. Oh yeah, someone's going to drop this like a ton of bricks, man. Or at least you could assume. So if you were lucky enough to buy down here, this is probably a take profit zone because it's not bullish. You're not trend trading yet. So when you hit resistance, you should respect it, take profit. But you're a bull, so you buy the dip with the roll reversal, drive it up there. Oh yeah, you better take some profit up here because you will be challenged. It is risk. The market is not bullish yet. So you better manage your risk, so on and so forth, okay? And I think you would even need a double bottom here before you can really turn this bullish. But we're a long ways from confidence. Okay. Now, let's say you're alpha. You just know better than everybody else that this is going to go up forever now. Cool. You should still respect these sell zones. And if it goes up, move your stops, right? And start building portfolios. And these are little buys, and there's a buy. And you just keep buying little trades and jamming stops. And once you challenge and break some of these things and have it go higher, move all your stops, and you have a cluster of stops. And portfolio trade it up. But, I mean, why not? One last hurrah for December, but then I got to be cognizant of my January move. Fred's like, momentum is dead, eh? I'm like, well, that doesn't look like a good bullish trade. That looks like a good bearish trade. Like, I know I got a lot of unnecessary lines here, but bear with me. Down, 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 up, up, sell, down, 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 up, sell, down, 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 up, sell, down, 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 up. As far as I'm concerned, it's just another sell. The only interesting part here is this is, let me do this in a different color. This is a double bottom going back weeks or months ago. So there could at least be a three-wave correction on a larger time frame and then back down. This could be down all the way to April. Yeah, no joke. This could just keep falling and falling and falling all the way to April. In fact, it's almost certain. So if this doesn't hold, even if it does hold, I'm going to be very skeptical. But April 1st, right? 2018 is fiscal year end in Japan. I'm sure you know that, but that's when money comes back home to Japan to pay taxes, which would continue the strength in yen. How does that relate to carry? You will be long and losing thousands of dollars, but you'll still get paid 1 penny interest. John, you'll lose $10,000, but you'll make 42 cents in interest. So it's not so bad, right? It ain't so bad. It doesn't. So again, if you're long, you'll make 42 cents but lose $10,000. If you short, you'll make $10,000 but have to pay 42 cents. Okay. John says we would expect a long-term uptrend. Yeah, next year. Is it a correction to high time frame? Well, I guess, look, what do you want to, here's weekly. Okay. So you tell me, does that say long for months and months and months? Let's do it that way. This tells me that it could drop to 70. So it could still drop 700 pips. And, right? And let's say it did fall another 700 pips. You know, when does it become bullish? Right? It's not really there, right? So when did I say we could look for this to possibly be bullish? The third week of August. What? Third week of August is, oops, I'm not even quite right. Let me redo that. September, it's a little earlier. Okay, third week of August, 2015. April, May, third week of August, 2016. Third week of August was in here, and there was a tiny rally, but it rallied, right? So let me guess. Third week of August, 2018. So yeah, dude, this could drop all all day long until we get down to here. Maybe it does one of these things. It's kind of what I would expect. And then the third week of August, I buy it up. But why would I do that? Because I always do this. Because I'm habitual. Third week of August. Third week of August. Third week of August. Third week of August. Did I miss one here? August. There's no. That's pretty much it, right? How did I do? Right? And isn't it always amazing when someone hears me for the first time? They're like, yeah, it's the third week of August. And they're like, oh my God, he's so specific. Why is it the third week of August? I'm like, have you not opened up your charts? I'm like, why, right? Right? Like Katie's like, boom! I'm like, yeah, well, Katie, it's been there the whole time, right? The only sad part is this year was sucky. It only went up for a month. We were hoping for more, right? Let's go to daily chart now. Let's do this. Oops, clear. August, July 17th, July 29th, third week of August. So I'm sorry, it only went up for the entire month of September. And we're disappointed. Well, at least I was the only idiot on the planet telling you the third week of August is when you should be buying. I'm sorry you only made enough to buy a Porsche and not a Lamborghini, but there's always next year. I don't know, Robert. I don't know. By the way, have you ever tried to move $50 billion in one day around this planet? Have you ever tried to move 5 billion? I know people that have moved 5 billion in a day, and it's not easy. $5 billion is not easy. Central banks, when you start moving money like that, central banks don't even like it. I know someone that had $2 billion in Hong Kong and tried to move it, and the central bank wouldn't let them. I'm not joking. No, they're like, no. You're like, what do you mean? It's my money. They're like, No, no. How do you like them apples? So yeah, Tim Cook. Yeah, I'll just pull my 50 bill. Yeah, all right, sure, sure, whatever. Well, there was a very interesting time that I could relate to this, and then we'll wrap it up. Oh yeah, I'm way over, right? Then I'll wrap it up. There was a time maybe 6 years ago when Japan raised taxes. So as a CFO of a company, you had to choose. Pay taxes this year at a lower rate or pay taxes next year at a higher rate. What would you do? Doesn't matter, John. You want to pay more next year or less this year? No. Imagine you're CFO of like Mitsubishi or something. We're talking a lot of money here. So whatever your answer was, in reality, you want to pay less. Now, I see that we're master debating here and saying, well, next year is still better. No, next year is not better. I know you're deferring, but what you're saying is I don't want to compare it to whatever. Let's just say cheaper is better. You're going to pay your taxes, and deferring it, you might say, well, you can invest the money. No. So, anyways, here's what the CFOs chose: to pay the lower rate. Now, so there was a time, and again, I think it was 6 years ago, where the Japanese yen was super strong, and I was buying as much of it as I possibly could. It was ridiculous because you just knew what they were going to do. So Toyota Japan called up Toyota America and said, repatriate the money now, repatriate the profits now, kind of thing. And then on April 1st, stopped. So if there is a situation where they change the tax code and it's advantageous to repatriate money, it will be more than just Apple. And yeah, we'll enjoy some inflows. Cool. Then it would be our job to make some money. No, that was about 6 years ago, Ryan. Yeah. No. Last year was totally normal. So last year has to do with hedge funds taking profit. Okay, so what are we looking at here? Clear this out. And I have to turn these off. Okay. Okay. Off. Okay. All right. So last year it went up late, right? Up. December, up, and then January, right? Why does it come down? If you take your profit here, you pay taxes in 2017. Remember, this is 2016. If you take your profits here, you pay in 2018. And the difference is about, within that month. So let's say the relative difference is 2 weeks. But you get to keep your money for 52 more weeks, right? You get an extra 50 weeks. But also, by the way, go back and watch the FX Street interview I did where I was talking about how we were all long here. And then I was in the Caribbean in here, and I'm like, I'm thinking about getting out of all my yen longs, meaning yen pair longs, and I'm about to reverse the whole situation and buy all the Japanese yen back. Right? Watch the video, right? And then when did I say I was going to stop buying the Japanese yen? April 1st, which is here. And I'm talking about it here 5 months in advance. Oh, it topped out while I was speaking. That's pretty funny. Yeah, well, it was a Friday, I think, right? I had my three-piece suit on. I was on my way to meet with the central bank. Cool. Right? So go back and watch the video. Right? It's a 1-hour interview. But now you'll know, right? This and this move is U.S. taxes, depending on when you wanted to pay them. And then this move down here is Japanese taxes. Okay? And I'm predicting it to the day in some case, or let's say the week. I'm predicting it to the week, like, you know, these moves here, this move and this move here, this move here. I'm predicting them months in advance to like the week, like the first week of the first week of April, you should get out of your Japanese yen longs and start shorting the yen again. But, you know, I was really looking for the big yen move to be back on the 3rd week of August, right? So I'm literally saying things like the first week of April, the 3rd week in Japan. And then in here, I actually predicted a false rally. We didn't get it on this pair, but we got it on other pairs. So I talked about selling it for 2 or 3 weeks, and there's going to be a false rally, which I sell back down. And again, metal will stop April 1st, in which I'll look to go back around, preparing for summer trades. And not that complicated. But I know when you're new it is, so that's why I'm here for you every single day. Because one day I want you to succeed wildly. And if I've earned your loyalty and respect, please open an account at TradersWay.com. I'll do my job, you'll do yours, right? So we got some more technical analysis in today. I babbled a little too much yesterday. Cool. Yes, I will. I promise I will upload it. Okay. Cool. So peace on earth. May the pips be with you. May your profits be above average. Make sure you open that account at TradersWay. Don't be a lurker. You have a responsibility. Thank you, Peter. Okay. So again, peace on earth. May the pips be with you. May your profits be above average. And by the way, let me ask you one question before we go. How much does a pack of gum cost? Yeah, $65. How much does a TV cost? That's the $65,000 4K TV sitting on the poor person's, sitting in the poor person's apartment, right? So we'll go back. A 20-year-old decides to buy a TV because they're at Sam's Club or Walmart, and there's a big Black Friday special, 65-inch 4K TV for $1,000. And he says, it's only $1,000. I'll put it up in my apartment. Right? I said if the stock market averaged 10% per year over a course of decades, with 3% inflation on average over the course of decades, right? You have the 10% minus 3%, so your real, that's a percent, so your real is 7, right? So the rule of 70 is 70 over 7 equals 10. So every 10 years, your money doubles. So okay, so let's go through this. You're 20, a 20-year-old, instead of buying a 4K TV, because he's got the cash, decides to put it into the market, buys a mutual fund or a stock index. Let's say stock index because it's low cost, right? So when he's 30, it's 2,000. When he's 40, it's 4,000. When he's 50, it's 8,000. So I guess I'm off somewhere, right? When he's 60, it's 16,000, right? So when he's 70 and he decides to take the money out, it's 32,000. So I'm sorry, I'm off one compound. So that TV he buys at Walmart because it's only $1,000. It's a great deal. Costs him $32,000. So what does a rich person do? What does a poor person do? I think Conway West. Yeah, I think Conway West has a line, and I can't even remember, but it's something, it's pretty funny. It's something about like white people don't know how to spend their money. Right? Do you know the lines? It's racist, but I think it goes something like money, black people can't get it, white people can't spend it. I don't know, something like that. I have to Google Conway West and listen to his genius words. But if Conway says it, you know. But yeah. So, anyways, so I apologize. It's not $64,000 TV. Oh, is it a Rick James thing? No. Is he just ripping off Rick James? No, really? I'm not a Rick James expert. So anyways, that cheap TV he got at Walmart cost him $32,000, right? So imagine now you put you put $1,000 a month into retirement. $1,000 a month. Click. That's right. It's in click. Click, click, click. So, you know, $1,000 a month is $320,000. Yeah, I know that Rick James thing is Dave Chappelle. Of course, it's Dave Chappelle. I watched an interview with him 2 weeks ago, and he said he's at Disney World with his wife and children. Right? He'll just be standing in line with his wife and children to get on, you know, Peter Pan ride, and people would come up to him and say, "I'm Rick James, bitch!" He's like, oh my God. Like every 5 minutes. And he's like, dude, I got my wife and kids here. Come on. Oh my gosh. But he has to spend his millions, right? And cry about how everyone says that to him. So anyways, got to go. Peace on earth. May the pips be with you. May your profits be above average. Late.